whatever. Okay, let's do this. It is 6 o'clock. I'm a big advocate of starting on time. So I'll get us started. And I'm sure, and more people will be joining. I can see people coming on. More people will be joining as we join. Megan will talk a little bit about housekeeping, but I'm going to start with this. My name is Warren Porter from IronGate Wine. We have Megan McDonald from IronGate Wine. We have Carrie Tuck from Cult Wines Canada. And though it looks like we have Megan McDonald in Atul spot, for some reason it's coming up with Megan's name underneath Atul. So that's the four of us. We're pleased that people are able to join us on a beautiful summer night with a hockey game going on. And by the way, if I say that and all of a sudden people start dropping off, then I'll say that was my mistake. What I do want to do, and I think that's important to note here, is that IronGate has been around for 17 plus years. And over the years, we have been approached on a number of different occasions from I'm not saying that Cult Wines is a fund, because it's not categorized as a fund, but we've been approached by funds in the past, and I've always kept them at bay because I understand the concept, but I wasn't entirely trusting of the entity such that I could refer my clients to it. A close friend of mine in my tasting group joined Cult Wines about just before the pandemic. A gentleman by the name of Austin Walsh, who I love and respect. So I was still learning a little bit about it, and I began talking about Cult Wines in my seminars. Then when Atul joined, I said, okay, Atul, I know enough over many years. I know his history, certainly with Vanguard, his integrity just as an individual, somebody I trust. So a combination of a good product and somebody I trust, certainly inside of this area, was very, very important to us. And I honestly wouldn't do this without it. So that being said, I'm going to turn this over to Megan to get us started, and then she can go back and forth with Atul on the first set of questions. And Megan, if you could also introduce Atul to everyone as well.
Absolutely. Okay, so hi everyone, I'm Megan, if you don't know me already. I'm going to go over some brief housekeeping items before we get started with the questions. So as you can tell, everyone is muted on as they enter the room, but if you have any questions, please use the chat feature, which is along the bottom. It's in the bottom menu, and I believe that Carrie is going to be monitoring that this evening. We want this to be, it's a smaller group, so we want this to be as interactive as possible, and you guys can get the most out of Carrie and Atul while they're here. This is also going to be recorded, so we'll edit this at the end, and then we'll put it up. We'll send out a link for anybody who is interested in watching it after the fact. Without further ado, I wanted to introduce Atul and Carrie. So Atul, Tiwari, and Carrie Tuck, as of this April, launched Cult Wines Canada. So they obviously have switched over from an ETF-based company, a Vanguard group. And so for those of you who don't know what Cult Wines is, I know Warren spoke to it already, but there may be some people in the crowd who don't know what Cult Wines is. So it's a London-based company that it really is a world leader, I think, in fine wine investment and collection management. And they were founded in 2007. They have offices all over the world, including London, Hong Kong, Singapore, now as well in New York. And they manage over 150 million euros worth of management. So I guess in saying that, I'm going to jump right into the first set of questions. And they're kind of general questions, just to paint the picture of what Cult Wines is. I was just wondering if Atul, you could give us like a high overview of what Cult Wines is offering to the Canadian investor, and can you tell us how wine fits into an investment portfolio?
Yeah, sure. Thank you, Megan, and thank you, Warren, for those kind words as well. I really appreciate them. And Warren and I have known each other for many years, and in the wine community, it's a small community, and I've always loved working with Warren and with Megan and IronGate. So thanks very much for the opportunity to be part of this webinar. Thank you. Right, so your question about Cult. So absolutely, as you mentioned, Cult's been around since 2007, and is a world leader in offering fine wine investment management services. And so what that means is that investors or clients who sign up with Cult Wines become holders of managed portfolios of wine. So they actually own the wine. It's theirs. It's stored professionally in bonded warehouses in the UK. We take care of the insurance. We take care of the transportation. And so once an investor comes on board, and we can talk about how that happens if you like. Once they come on board, we then will either manage the account of wine for them on a fully discretionary basis. In other words, Cult Wines does all the buying and selling over time. Or if the client would like to be more engaged with their portfolio, which a number of passionate wine aficionados are, we can also have the account set up so that there's no buying or selling without discussion and agreement beforehand. So essentially that's it. And we look to investors who take about a 3 to 5 year minimum view of their holdings, because as we all know, you want to give the wine a bit of time to appreciate in value before you even talk about selling your position. So as an investor, you would want to think of it in that time frame. But having said that, we don't have any lockup or hold periods. So if a client did want to exit their portfolio or position within a year, they're perfectly free to do so.
Okay, that's great. Thank you. And with regard to fine wine as a part of a portfolio, I mean, I know it's about diversifying the portfolio. Can you speak to how wine fits into that? Like, what percentage of your portfolio wine should be taking up?
Sure. Yeah, that was the second part of your question. Wine would be considered an alternative investment, and as you pointed out, Carrie and I come from a background where what we were involved with would be considered more a core part of the portfolio. What we're doing now would be considered an alternative. And generally speaking, it's accepted that your portion of overall portfolio that would be in alternatives would be somewhere around 5 to 10%. And we're seeing clients probably approaching more the 10% level than the 5. But of course, that depends on your own investment actives and risk tolerance. So in terms of the amount that it should represent, that would be a good guideline. Beyond that, the role that fine wine would play in a portfolio would be really to provide the diversity benefit of an alternative asset class, and one that is a real asset. So in other words, you own it. It's like real estate, only it's wine. And so that's something that a lot of portfolios don't have. In Canada, there might be people who are concentrated in real estate, but beyond that, the physical hold may be gold possibly, but that's about it. So wine gives you another diversifier there. And then there's the investment merits of a fine wine portfolio. And just briefly, those would be sort of the obvious economic, axiom 101, which is supply and demand. Because as you both know, Megan and Warren, there's only a certain amount of fine wine made every year or produced every year. And we would put that at about 1% of the global market for wine. So that's about $4.5 billion worth of fine wine being produced every year around the world. Now, as that wine circulates, gets consumed, as demand increases, more and more you're seeing Asia, Asian investors and investors really from Latin America, all over the world. It's a global market, buying wine and decreasing the supply. Obviously, price goes up, and that's just that economics works, as we all know, supply and demand. The other benefits are low correlations to equity markets, low volatility, so your risk-adjusted returns look really good. And then, very importantly, I think in these times, the low downside capture. So for those who aren't investment geeks out there, with that when the markets go, wine doesn't go down nearly the same amount, and that can be demonstrated by looking at history. So in the year 2008, the S&P 500 went down about 38%. The LiveX of wine went down 0.6%. So you see it cushions the blow to your overall portfolio in a down market, because it's not going to go down as much as the equity markets.
Atul, can I jump in for 1 second? Because I've been asked this a lot over the years, and I'm sure you do too. And a general question is wine a good investment? And it's so loaded, because when you buy commodities or gold or diamonds or whatever, there's a market, and then you try to get the best, trading rate that you can, and it's either managed or you do it on your own. But the difference with wine is huge for a number of reasons that I tell people. The first thing is, the swing in a 2000 Petrus, for example, can be anything from $2,500 at auction to $7,000 at retail, number one. Number two, as much as you can look at these indices, there's storage costs, there's insurance costs, there is taxation. There are all these different factors that are applicable. So when someone says, is wine a good investment? The short answer is sure, ex-chateau, if you're getting a good price and you can store it in bond in London, in other words, not taxed, and a number of other factors. If you're buying it in Ontario, fully taxed, and you've got to take it to, as much as I own a storage place, you got to take it to a storage place and you got to insure it and do all that stuff. All of a sudden, as we kind of, made the analogy, you're taking a car and you're driving it off the lot and depreciating it very, very quickly out of the gate. And that's why I've always found it more interesting and from a purely investment standpoint, okay, not a drinking standpoint, from a purely investment standpoint, that these things are crucial to making sure that you're making a wise investment. So can I get you to comment a little bit on that? Because I really think it's the core of what you guys are doing. And it can take wine from being a decent investment to being a terrible investment.
Yeah, it's a great question, Warren. And I think the answer is that cult wines actually makes it a great investment for a number of things that you brought up. The other thing is, and we can talk a little bit about the fees and the performance, because that's important as well. So to answer your question in terms of all of the issues that go around the physical asset, those are very important, as you say. You want to make sure that the wine that is being purchased is, in fact, the real deal, right? So the closer you can get to the chateau or the domain to purchase the wine, the less likelihood there is that there's going to be some fraudulent liquid put into those bottles, right? So we have a very strenuous and rigorous program in buying, and have many, many relationships with producers that have been built up over 13 years. So we have some privileged access, which is terrific. Last year, Cult Wine was the second largest buyer of Home Premier Bordeaux wines in the UK, which is pretty large. So that part of it is important, accessibility. And because of our scale and our relationships, we have that at Atul. Beyond that, we have all of the pipes laid for the offering. So in other words, all the transport companies, we ensure that the wine is transported in perfect temperature controlled conditions, as well as vibration and all of those things that are important to maintain value in wine. Storage. Our storage is through London City
Oh.
Bond, which is an independent third party in the UK that has somewhere around, I think it's 2 million square feet of storage. IronGate may grow into it at some point, of course, but that's a lot of storage space that they maintain, again, in perfect conditions. Insurance, we use Marsh McClellan to do the insurance, and so this has been taken care of for the investor, which makes it very easy. So if you try to do it on your own, it's a little bit harder because you have to make sure all of those pieces are working for you. Whereas we've done that already. And then when you take the next step of it, which is fees, in the alternative class, our fees are actually very reasonable. They're 2% management fees. That's an annual fee. And beyond that, there's what we call an acquisition and operations fee, which is a one-time fee on new capital invested. And it's a tiered fee depending on the size of your account. At the lowest level of our current offering, it's 5%. So if you think of that as 5% on your way in for any new capital, it doesn't apply to reinvested proceeds, and you hold for 5 years, that's 1% per year, right? So it's 2% for a management fee, 1% per year on the acquisition fee. So that's 3% per year. About the cost of a mutual fund in Canada. But you're getting an alternative asset class. You're getting a portfolio manager who's giving you advice. You're getting an actively managed portfolio, which to me seems like a pretty good deal. Beyond that, we don't charge any performance fees. A lot of times in the alternative classes, you'll see a 20% performance fee if the fund performs or the manager performs. We don't charge that. And finally, we don't charge fees for sales. So there's no brokerage commissions or auction commissions client bears. If we do incur any of those, we eat those. So overall, we think we're making the asset class very accessible at a very reasonable price. And the returns since inception, since Cult Wines has been keeping track of performance, which would be October of 2009. And the way that Cult does it, or we do it, is that we aggregate essentially the returns of all of our clients, because these are bespoke or tailored portfolios. So on that basis, the returns, again, I'm an ex-lawyer. Of course, I have to say this is historical and doesn't always translate into future results. But historically, over that time period, it's 2% in Canadian dollars per year. So if you think of that as your returns, the fees, in and around 3%, then you've got a pretty good net return.
Awesome. Yeah, no, that's incredible. I know that you had mentioned something about, we were talking about supply and demand earlier. And I know you had said that, fine wine market is certainly increasing. And I know that we've seen that, and especially since our second auction, we've definitely seen that there's an appetite for fine wine buying and fine wine investment in Canada in particular. I'm wondering if you could comment on why now? Why bring Cult Wines to Canada? Why do you think or what potential do you see in the Canadian market that Cult Wines has found in other countries?
Yeah, I guess part of it is driven by what we wanted to, and I include Carrie, who's on the call. We've been in big companies all our lives, and that's great. There's a lot of smart people working in big companies, and there's a lot of really cool initiatives that you can do. But it's not like having your own business, as you know. One of the things we had talked about doing with a group of others was something entrepreneurial that ended up getting derailed with COVID. So with that, shifted focus and thought about what sort of alternative asset class could we bring to Canadians, because what we've done in the past is bring kind of new vehicles or new asset classes to Canadians, and more specifically to retail or high net worth investors who previously didn't have access to these opportunities. And so going down and being able, from my personal perspective, to marry my passion for wine with my passion for investments, it just seemed like a no-brainer. It was, you know, could you have a better job? Probably. And I think that's how we feel about it. So that quite honestly was the driving force. And then you get into all the investment merits that we've just talked about, and just how strong the offer that Cult Wines has, and an opportunity really to be by far the global leader in the space. As you know, when we looked at it, nobody's done this in the way that Cult is in Canada before, and quite frankly, no one's in the United States. And so we're also very excited about the opportunities that that market presents us. So all that's really exciting. In terms of your question of why now, there's probably never been a better time to diversify into a real asset. And with that, I would say, you know, obviously wine specifically, for a lot of reasons we just talked about, what it does to your portfolio. Equity markets are at all-time highs. There's more likelihood that they're going to come down to a large degree than they're going to go up to a large degree. And so again, the importance of no downside capture to your portfolio is right there. Real assets, Bank of America had a report a few weeks back that showed that real assets like fine wine are at historical price lows against financial assets. In other words, the stock market and other financial assets. The equity markets are very concentrated. You know, in the US, 5 or 7 stocks that we all know have driven the performance of the S&P 500 since COVID. It's not a broad market rally. It's tech stocks that are making the indexes go up. In Canada, there's one name last year that drove returns, and that's Shopify, another large tech stock. So, you know, we have a little bit of concern that people are lulled into a bit of false security with the equity markets doing what they're doing, because it's actually not the entire market. It's concentrated in terms of what's driving the returns. So all of those reasons we think kind of say this is a great place to diversify. And the last one I'll mention is inflation. You know, we've been fortunate to live in times where most people don't even remember inflation, but we're seeing an uptick there. And with inflation, as we all know, come higher interest rates. And wine, again, performs well, like other commodities, in an inflationary environment.
So I'm going to jump in for 1 second, and I hope we haven't covered this. What was interesting was that as we were in the middle of this, my doorbell rang as trucks rolled up out front. And I think what's happened is I lost my internet connection, so I was gone for a little while. And maybe that's why they were ringing my doorbell, but I came back onto my phone. But here's what I would need to understand, and maybe the people on the line need to understand as well. We drop in $100,000 into Cult Wines. Is it a pooled asset? Is it a pooled amount of money with the underlying asset being fine wine? Or am I buying under my name $100,000 worth of wine? Like, what does that exactly look like? Because then when it comes to me wanting to sell, like, I get it totally from commodities and currency and stocks and all that kind of stuff from a fund perspective. But I don't want to kind of, you know, take it back a little bit, you know, where we may have started, but I'm really want to get into the depths of how this looks from a what do I own perspective if I write a check to you for $100,000 as an example.
Right. Well, first of all, hopefully one can deliver to you.
Yeah.
We have a delivery of that. But yes, that's great. Secondly, to answer your question. Sorry, I'm
There's a bit of
feedback.
There's a bit of feedback. Yeah.
I'll mute just in case it's coming.
Yeah, maybe if you mute for a second. Okay, that's better. Good, thank you. Right, so on your question, it's a great question because we've talked a little bit about it, but maybe it's important to be more specific, which is when you invest with Cult, you are not buying into an investment fund. So it's not the case that you're owning a unit in a fund or a fractional share of wine. When you invest with Cult, what you get is a managed portfolio, a separately segregated managed portfolio of wine. So in other words, you own the wine. That your $100,000 check, which by the way, we're happy to accept at any time, goes right into wine. goes right into wines, and generally speaking, there'll always be original wooden case because again, we want to guarantee provenance and value. So you will see exactly what holdings you have within that $100,000. So 1996 Leoville Las Casas, 2016, 17 Sasakaya, whatever. You'll see that as your position. The wine, when it's held in storage, is actually segregated, and your name will be right there with the cases of wine in the independent warehouse operated by London City Bond. So as we said before, you're perfectly free to either hold on to that forever, sell it whenever you want, or we will recommend when you do that, if which would usually be the case, or take possession of it, and it's your wine. So totally up to you to decide, how you want to deal with it.
It's a funny. Go ahead.
No, that's good.
I was just going to say it's kind of an interesting thing because we sell wine. We have an auction house. We have a retail shop in New York. We sell wine. We store wine. My customers would probably look at me and go, "Well, hold on a second, Warren. If you store wine, these guys are going to store it with somebody else. And if I'm going to buy wine, you're telling me to buy it from them and holding it in London." And the short answer is yeah, because if all you're doing is investing in wine, that's the right way to do it, right? From our perspective, because one of the biggest things is holding it in bond, I think is probably the biggest issue. So alcohol is taxed like crazy. Every time it crosses a border, every time it moves, it gets highly, highly taxed. And so in order to recognize a decent investment return, you've got to pull that out of the equation. Well, the second you bring it into Ontario, listen, that healthcare is not going to pay for itself. You have to, you've got to pull that out. And so if someone says to me, "I'm just interested in an investment," I would have to say to them honestly, that does not mean buying stuff in Ontario. Now, it could mean getting a killer deal at an auction and doing whatever and selling it 20 years down the road. But from a purely investment standpoint, you've got to start factoring in mostly holding things in bond, getting it on Premier or at least ex chateau, having it cellared properly and all those things. So I kind of wanted to explain why we are saying this to people when one would think that it's almost competitive to what we do. I don't believe that it is. We're about wine for consumption, and if it provides an investment return down the road when you retire or you can't drink anymore, whatever it is, that's something totally different. But that's where I see cult wines fitting into this. Am I right in those assumptions, Atul?
Yeah, that's right, Warren. For the most part, you're absolutely right. I can speak historically for cult wines in terms of, almost now having $300 million of Canadian dollars of assets, of wine assets, right? The general profile of our clients are investors. And so historically, about 80% of the wine has been investment wine. It's been sold. The proceeds have gone to clients. About 20% clients have decided they're going to take possession of. Now, as you've pointed out, in order to do so, you have to, first of all, obviously pay the VAT tax. When you take it out of in bond, it's a 20% tax on the original price that you've paid for the wine. There are duties that need to be paid that aren't onerous. There are a few, sort of like $2-3 a bottle or something like that. But then the jurisdiction that you're bringing it into will have their own taxes and excise and customs and everything else that we know about. So, it's up to the individual as to whether they want to take possession or not. But if they do, obviously they need to do it through their local liquor board, and each province has different ways of dealing with that in terms of transporting and paying all the taxes. But right, from an investment perspective, you know, when you sell it, you're selling it, you do not need to pay the VAT tax. It's the person who takes the wine out of the in-bond storage who pays that 20%. So that, you know, that's an incentive right there.
But while you are purchasing wine on behalf of a particular investor, and you are storing it for them, and their name is on the case, as you've said, it's their wine, effectively. You know, that from a layman's perspective sounds like a broker, but you're not that. You know, you are there specifically to allow the individual, regardless of their expertise, whether they're an enophile or whether they're drinking box wine, to add wine as an asset class, and you're doing the management for them and making sure that they're getting the right product, unless you are buying box wine, I don't know, and making sure that that they're buying the right product, right? So it's not. You know, while you're buying it, it's not like you're buying it and going, here's your wine. You're not a trading floor, right? Like you're purchasing it and holding it for that client. Yeah, got it.
Yeah, absolutely. Yeah, I mean, we approach everything from an investment perspective, and we have an investment committee, which was part of what really attracted me to Cult Wines. Was in the research that I did as to who was out there in the space, Cult Wines by far struck me as the most professional organization who seemed to really understand the space and what it would take to be successful. And when you look at the investment approach of Cult Wines, I mean, we have an investment committee that's a global committee. I had my first meeting last week. It was we do it quarterly. My first one last week was 2 hours, and everybody, you know, had opinions, and we talked through what we thought about different regions, right down to different producers and labels, and what, you know, what we see from a macroeconomic standpoint, like tariffs. What's going to happen with the U.S. tariffs that are currently suspended? Will they be removed? You know, what about China? They've got tariffs on Australian wine. Are they going to keep going with those? So, you know, there's a lot that goes into these decisions, and it's not just you know, as you say, it's not just a couple of brokers or merchants in a back room going, "Hey, we got to move. You know, we've got to move Grange because we've got too much of it." That's not how we approach it. It's really approached much like an asset manager in the securities world or stock world would do, which is start with the allocation by region, and then go into each region and look at each client's risk tolerance level and objectives, and determine what, you know, what labels, what brands, what producers, what vintage years are suitable for that particular investor.
We've talked throughout the seminar about, sorry, Megan, I just saw that I'll let you jump in a second, but I wanted to, we talked about everything being ex-Chateau and on Premier and what have you. Is Cult Wines purchasing off of any other sources other than direct to Chateau? Are you in the portfolio that you're purchasing on behalf of your clients? Are you buying from auctions? Are you buying from stores? Or is that not within your realm? Where are you acquiring the product?
Yeah, the vast majority is direct from producer or negotiate. As you know, in Bordeaux, a lot of the trade is done through negotiants, and some in Burgundy for that matter. So it's producer, negotiant, reputable agent, reputable merchant, and very little wine is purchased from anywhere else for the reasons that are obvious, which is, you know, you just want to, again, like I said, the closer you can get to buying directly from the producer, the better you'll know and be able to certify provenance and that what you've got there is actually the real deal.
Okay, Megan?
Yeah, no, what I was just going to add to Atul's comment was that, you know, a lot of people, when I'm helping them with wine, they ask me, you know, okay, so if I'm investing in wine, you know, are there certain regions I should be looking at? You know, there's Bordeaux, there's, you know, Burgundy, there's Rhone, but is there anywhere else I should be looking, and why are you looking at those regions? And it was good for you to point out that it's not just, yeah, get like a couple agents or like sommeliers in the back, you know, making, you know, very, biased opinions, but there are people back there crunching numbers and looking at it from an investment point of view. But I was scanning the website before we hopped on, and you do have like buying managers, and you do have people who are out looking for new producers and things like that. And I guess that's too, to jump on new trends and to find new wines that will be the next cults and the next new things to invest in. That was just,
it's very interesting. And yeah, I would say, Megan, that's a great observation, because again, it's interesting for Carrie and I, coming from an asset management background, to see all of the similarities. And so for us, our brains are kind of, we look at it like, is this a blue chip? Is it a small cap? Is it an emerging market stock? And you can do the exact same thing with wines. So when you're talking to an investor about their profile, their objectives, some investors come into us and say, look, for this portion of my portfolio, I want high growth. Like I want to, I want to stretch for returns. And for Carrie and I, that's exciting, because we're going to go, okay, well, you know what? Maybe we don't go with the traditional blue chips, at the weightings that we would usually have them. Why don't we look at some of the up and coming second and third tier producers in Burgundy that we're watching, and in the last few vintages they've had great wines, great scores. We can show you they're appreciating at whatever it is, dozens of percent per year. So they're exciting. There's a little bit of risk to it, but there's also the reward that this producer or that winemaker could be the next Loire, right, or what have you. So
have you spoken? Sorry, Atul, carry on.
Yeah, I was going to say, that's one way to look at that element. The other way to look at it is the expanding market for wine globally. So when you look at the stock exchange for wine, which is LiveX, based in London, where we get our pricing from, by the way, and I think that might have been one of your questions, Warren, earlier, was just around the value of wine. So we value all portfolios based on the independent third-party pricing provided by LiveX, which we think is the best way to do it, because it's not us or somebody else saying this is what the value of your wine is. It's the market that exists on that stock exchange of the 500-ish global wine merchants who are making markets in those wines every day. And that's what you see as a client. You log into your account, you see the LiveX feed come in, and that's the price of your wine.
So the pricing that's coming in, the valuation of a portfolio, is a direct feed from LiveX.
Correct.
That's really important to note. And it was something that Megan brought up early, because I said, to that point, when you talk about the valuation of your portfolio, I said, well, it's true. Like, where are you going to get that valuation from? My gosh, to the example of the Petrus I used before, it can come from all over the place. So if that feed is directly coming in from LiveX, if nothing else, you've got that consistency, right? So that's coming in from the same source all the time.
That's right. And again, I've referred to myself as an ex-lawyer, and I'll say it again. When I went through due diligence with Cult, it was important to me that I went down all the governance and controls, and obviously, again, dealing with an alternative asset class, a lot of alternative classes don't have that transparency in pricing. And usually it'll be a committee within the company that will tell you what your value is, and you kind of go, how do I know? Right? So in this case, it's all taken out of the hands of us, and we just say, this is what the market price is, and therefore your portfolio is valued at this price. And we can point to, LiveX and the merchants who are making markets in those particular fine wines.
I think that's really, really key. That's incredibly important. We spoke earlier on about an amount of investment, and I think there's a couple of different levels. One that you start as you launched in Canada. You offer a product that has a buy-in investment of X, and then you're going to be expanding that throughout the summer. Can you talk about that a little bit, Atul?
Yeah, sure. I just want to finish on what Megan brought up, because I think it's really interesting. Is the expanding market for fine wine, not just investors, as you would know a lot about, Warren, but also just the regions. And so it's really neat to see the trading on LiveX, because there's a category called rest of the world. As we all know, Bordeaux and Burgundy make up the vast majority of investment wine, at least from this perspective. Then you've got Italy and Champagne kind of around the same levels, and you got Rhone, and essentially after that, it's the rest of the world category, which to me is kind of a funny moniker, but that's what they use at LiveX, and that includes, you know, USA, Germany, Australia, Chile, Argentina, all of those, Spain, all of those countries fit into rest of the world. But what's really interesting is you see some wines in that category, some that we'll already know, like Vega Sicilia or wines like that, or Egon Müller in Germany. We all, the wine world, know them. But as I kind of got deeper into understanding the stock exchange, I thought, now, what wines from Chile are we talking about? And you go in and you look at some of the returns on Senya, for example, and they're massive. So it's really interesting. And the trading in those wines globally over the last number of years has picked up. So market share for those wines in 2010 was somewhere around less than 1%. And today they're about 6%. So what you're seeing is new investors coming into the market and new regions and new wines coming in, which is exciting, because to me that expands the market for everybody, and hopefully we see more of that trend.
And do those Chilean, using that example, become the risky part of your, not risky, but the outlier part of your portfolio that you were talking about before, as opposed to the blue chips, right?
Yep, absolutely. That's absolutely right. And I'm happy to, like, my own personal portfolio, I went through the process with our portfolio managers for my own account that I opened up. And it was fascinating to me, just really interesting to go through the process of having the portfolio picked and then going through it with Jonathan. And it was really interesting because I had to, first of all, I said to Jonathan, I said, look, I'm one of those know-it-all clients who thinks he knows everything about wine. I mean, I know something about it, but I'll try not to have a lot of opinions about the investment side of it. And then, of course, I get the portfolio and I'm going, oh man, why is there German wine in my portfolio? I don't know anything about German wine. So we went through it, and obviously Jonathan talked about the investment case, and it was solid, right? So of course that's a sleeve of my own portfolio. To be honest, I don't know a lot about German wine. The Bordeaux and Burgundy and Italian part of it I all got, but understanding a bit more about the German market and the wines and how they appreciate in value due to scarcity, et cetera, it was a learning experience for me as well. So when we talk about Chilean wines and others, they kind of fit in that sleeve of something that not everybody looks at, but there's a good investment rationale for it.
It kind of, if you don't mind me cutting in here, it kind of makes it a little bit easier, especially in places like Chile, where you have investment from chateau like Mouton Rothschild, or the Rothschild family, say with Almaviva. And I mean, that kind of, at least from an investor, for someone wanting to put their money into Chilean wines, to say, okay, well, okay, if they're in Chile, then that must mean that there's some good quality wines, and they're kind of helping make the bridge, make the gap a little smaller.
Yeah, absolutely. Totally agree.
So let's we'll walk. I'm curious, and I think my clients would be curious. So I own the wine, and I decide that I want to do something with my portfolio. I want to possibly trade it in bond to somebody outside of the Cult Wines portfolio. So that's part of it. One, is that possible? And two, let's say I decided to take possession of it. That's something that can be facilitated. So I can either trade it in bond or out of bond. But am I able to make those decisions and those calls on my own, whether they're intelligent or not? And you facilitate those? That's all?
Absolutely. So as I mentioned, you can do the 100% discretionary account. So you come in and you say, here's my money, you're the experts, manage it for me. You can decide whether you want to meet with the portfolio manager to review your account quarterly, every 6 months, annually. And of course, you can pick up the phone and talk to us at any time.
And that's the level of investing that we were about to talk a little bit about. When you put in X amount of dollars, you get a portfolio manager as opposed to an AI manager, right? So
right. And sorry, yes, we'll come right back to that. So that's one way. The other way is you come in and say, look, I want you guys to help me here, but I know a lot about wine and I've got certain ideas around what I want to do with my portfolio. That's perfectly fine too. And you can say, for example, I get all that diversification stuff, but I only want Burgundy, Bordeaux, and Rhone. Like I don't like Italian wines. And if that's what you want, we'll build your portfolio that way. The one caution we would give you is you understand though that we have a benchmark allocation, which would include Champagne or Rhone or others. And we think that's a better way to manage your account. But if that's what you want to do, we'll do it for you. But just know that your performance will vary from our benchmark for those reasons, right?
well, therein lies the big difference between that and the fund, of course, right? Because you have the option of a self-managed portfolio similar to a regular stock portfolio. You can either choose it or turn it over to your broker, for lack of a better expression.
Yeah, exactly. And sorry to go back to your question. So right, the offer we've come out with as of April 12th in Canada is the portfolio managed solution, which is where you do get a portfolio manager. The minimum investment is $45,000. And what we're working on is a new platform that we'll unveil or reveal later in the summer. And what that will allow us to do will be to expand the accessibility of the asset class to people at the $15,000 to $45,000 range. And there, what will happen is that you'll essentially do all of this online rather than with a portfolio manager. And you will be provided with your risk profile based on your objectives and a portfolio. And what we will do, this is all automated, and what we'll do is we'll rebalance that back to the weightings that you originally had when they start to stray from your weightings in your portfolio. But that's what the offer will be, to provide access at those price points.
Terrific. We've got a couple of minutes left. Megan, is there any important things that we may have missed when I was off resetting my internet connection? And otherwise, I'm gonna close it by asking Atul to kind of summarize and help people understand how they can do an investment with Cult Wines. But Megan, was there anything that we've missed that you've got on your list of things you wanted to cover?
We didn't miss anything that when you were out. I did want to ask before we open it up to questions and to Atul, kind of, making some final remarks. How do you see the market in Canada for investment evolving over the next 10 years?
Well, and that's our chat really. It's Carrie and I know that there's two things that we need to do really to establish this business. Number one is to educate people on the asset class itself and how we are structured and how we can make it accessible and easy, and the merits of it, obviously, because very few people in Canada would, I think, say that they do wine investing in any structured and professional way. The second thing, obviously, is Cult is a brand name in the UK. It's reasonably well known in Asia, but is a new name in Canada and in the United States. And so the second thing we need to do is just really kind of talk about Cult's experience, Cult's vision, all of the things that we do to make this investment accessible. And so that's part of telling the story and building a brand. And those are things that we're familiar with doing with another name that we brought into Canada in our last gig. So it's it's something we've done before, and we feel pretty confident we can do again. So with respect to cult, that's our view. In terms of the broader space, I think fortunately we have a little bit of first mover advantage, and so if we can accomplish those two things in reasonably short order, then hopefully we're going to build the asset class as well, just generally in Canada.
I would think too that the one thing to just add, and I think Warren brought this up earlier, is just talking about Bordeaux EP, right? So, now is the opportunity, right? And, for us in particular, we're looking for people to book their opportunities by tomorrow if they really want to get full allocations to Bordeaux EP. Then we did a webinar yesterday. We had a lot of participants yesterday on the webinar, and we're getting lots of people that are interested. For some people, it may be a new investment opportunity, which is Bordeaux EP, right? But it's also a huge opportunity to get in right at the beginning when these wines are still in the barrel. So huge investment opportunity.
Yeah, agreed, because you've got the 2020 on premiere. Listen, there's a lot of research that's necessary in this kind of stuff. We can all know a lot about wine, right? But there is the knowledge of wine like Megan has, where she digs deep into the winemaking and the structure and all those things. And then the separate part of that is the investment side of wine, looking at it as an asset class. And there is no shortage of amount of work that you have to do, because it also involves currency fluctuations. It involves a lot of different things to make sure that you're getting the returns that you want. Megan, you could see if there was anybody that had any questions. I think we've covered most of them, and certainly for anybody who wasn't able to join us tonight, we're going to send out a copy of this to our clients who weren't able to join us. Megan, ask anything if you'd like that might have come up in the chat. Otherwise, I'll turn it over to Atul in the last 5 minutes to kind of summarize it for us and let us know how to follow up with this with you and Cult Wines.
I'll let you go ahead, Atul. I don't see any questions yet. Maybe people are
well, that means we've done our job well.
Yeah, maybe that's right. That's right. So you go ahead.
Go ahead, Atul. I'll let you cap us off.
Okay, great. Thanks, Megan. And thanks, Warren. Yeah, I mean, I guess at the end of the day, I would just say we're here. We're available for conversations, chats.
How do they find you, Atul?
Yeah, if you're interested in learning more, please, you can email me. It's Tiwari, so ATIWARI @cultwinesltd.com, or Carrie, and she's at ctuck@cultwinesltd.com. And I think on our website, Carrie, there's also a general email address where if you send one to there, Carrie and I and our two portfolio managers who are supporting us out of New York, Jonathan Stevenson and Austin Walsh, who's Warren's drinking buddy as well, are there to help us, and they're doing a great job in supporting Canada as we get up and running and onboarding clients, which we've been fortunate to do already. So
and certainly if anybody is looking, if anybody didn't kind of jot that down, they're welcome to get a hold of me. I'll certainly put anybody in touch with Atul, and happy to chat about it as well. I know that as we give seminars on various aspects of wine and wine investing, I like that. I really, really like that you guys have brought this into Canada, honestly, because I believe that there's a segment of the market that was missing. As I mentioned at the top of the call, there was a, we've been talking about this, or I've had people talking to me about this for about 10 years, and I've never been comfortable to recommend anything. So I'm really happy that we're bringing this and adding this into the mix. There's a lot of great changes coming into Canada and the fine wine market. And I certainly think that this is filling out a spot that we definitely need to see for all the reasons on an investment side that you've so kindly outlined tonight. So I want to thank you very much for your time. I don't know, go Leafs go. I don't follow it, so who the hell knows? Oh, anyway, so yeah.
Thank you, Warren. Thank you.
No, my pleasure. And so, look, we look forward to following this up. If anybody wants to get a hold of me or Atul, please let us know, and we'll certainly put this out to the group. Atul and Carrie, thank you for your time tonight. Megan, thank you for your time as well. I appreciate it from everybody, and I look forward to helping you guys with a very successful launch of this terrific business, what much needed for Canada.
Well,
I appreciate it.
Thank you.
Thank you, Megan. Thank you, Warren.
Thanks for
Okay.
to talk about cult wines, and be well, and look forward to when we can get together in person for a glass of wine. Long overdue.
Very much so. Very much so. Okay. Good night, all. Thank you.
All right, thank you.
Congratulations on auction results as well.
Thank you very much. I appreciate
job.
it. Take care.